Happy Friday. What's up, what's up, what's up? It's 1:45. I'm not going to be late for TV. Awesome. Perfect. It was a busy morning too. Bitcoin was getting crushed. There's the chart. Going to CNBC. We're going to be talking energy, and I'm on Power Lunch for the Trading Nation segment. Usually I go to Englewood Cliffs. I asked them if I could go to 30 Rock because I'm going to meet my buddy JC Parets, who's doing Fox Business at the exact same time I'm doing CNBC. As soon as I'm done with CNBC, I'll run over to Fox with you and I'll walk him up. And it's 1:45. I'm supposed to be there at 2:15. Like, I'm on time. This is great.
I wanna change something.
I have such a deal going on right now I gotta tell you guys about. Can't say anything yet, but soon. Thank you. No, thank you. I've been negotiating this thing for months. I really want to tell you about it. It could be huge for the business. As soon as I have details, I'll let you know. Okay. So we're going to talk about energy. Energy's been moving up. Crude oil's going pretty strong because bonds are pushing lower. Maybe inflation's coming and a little growth coming back. So that's what we're talking about. And also, again, I hate to be dodgy with you on this deal, but it's pretty cool. I really hope it goes through. We've been negotiating for a while, and it's a really good boost for my business. And it's an honor that this company is talking to me, and I hate to be dodgy. How do I look? This is where the fast money desk goes, which I think is right there and right there.
Touching that stuff makes me schizophrenic, but anyway.
Let's go see the control room. Let's see what's going on here. Whoa. It looks very good. I like the bottom formation here, Brian. We have a little bit of an inverse head and shoulder. Massive underperformer in 2013 is the third worst sector, but it looks like we want to go up, retest these old highs just in the $70 to $75 region. The stock that I like to play, actually just put the trade on today, was EOG. Alright, now I'm running to Fox, which to me, JC, which I don't think is against my contract. I think it's okay if I'm there.
Buddy.
Large and in charge.
How you living?
All is well, brother. It's Friday and it's almost happy hour. I love.
He is. He's the support staff.
I'm his employee.
He's the hype man. He's the Little John of the stock market.
I'm support staff. Robin Hood, taking from the rich, giving to the poor.
Touching the stuff makes me schizophrenic, but anyway.
I'm going to ask him at the end about his fundamental charts and what they say about Bitcoin.
Fundamental charts. The oxymoron.
It's kind of the same. I want you guys to get along.
Let's get technical. Take the emotion out of it. That's what JC Parets is doing. He's with All-Star Charts, the founder and president. We've had an incredible rally.
Yeah.
In 2017. What do the technical charts, which eliminate all, yeah, but,
From a risk-reward standpoint, I can't think of anything that I like better right here, right now. I think we get a 50% rally, and if we're above...
I think that we have a very well-defined risk level with very clear upside objectives, and if it is a pump and dump afterwards, again, not my problem.
But you own it.
Yes.
How much?
Not enough.
Nice answer, JC. Happy holidays
Thank
to you.
you.
A good friend of this network and this program.
Our favorite viewer tweets. Next.
Music's full. Clear in studio. Stay seated. JC. Good, Trivago, we're good. We're good.
Nice.
We're set.
Nice.
Sunset. Thanks, brother, man.
Nice.
Nice job, dude. You're solid.
Bro.
Always solid.
Love you. What?
Bye, Liz. Enjoy the holiday, bro.
Great job, man.
Let's go to the bar.
Spoken like a true trader.
I don't have to look good in real life, just look good on TV, right?
Look at this. Men removing makeup.
Right, TG?
This is going to be the thumbnail right here.
Men removing makeup.
Men removing
See?
makeup. Yeah.
Is the makeup removed, you think? That's good.
Yeah, I wish Bob Marley would still be alive and see me try.
Recording there. I'm recording here. I've got audio into you, recording me. Right? I don't think I'm gonna fuck this up. All right.
I certainly hope not.
Dude, you look good. Good camera. So, yeah, just where are you going to show me? You got a kimono, a trading jacket.
Yeah, so you're like, what is that dirty laundry you have up? And it was actually because I had the wrong camera on.
I thought you showed me your dirty boxer shorts laid over
This
the
is
back.
a kimono. This is a kimono. Here, I'll put it on for you.
Oh. He is the Karate Kid of trading.
Isn't this awesome?
Yeah, that's awesome. Jackie Chan of
So I get to the
trading.
New York, I get to the Tokyo Stock Exchange, and you want to know something really disappointing
Yeah.
that I found? I didn't see a single candlestick in the entire building.
Oh, I've seen you use that joke. That's awesome.
It's not a joke, it's the truth. I'm still disappointed about it. That's what I got.
All right, so basically we're this is what happens when JC and I get together. So we started off in the city, and we're picking the vlog back up. I did CNBC the day before. No, what am I saying? I'm oh my god, I just moved. Dude, I'm in a new office, a new house. Like my life is chaos right now. Good thing the market's not breaking to new all-time highs. So this was back almost in December. I'm doing CNBC. JC's doing Fox, so like I get done, I just tear ass right to Fox Studios, meet up with him. You guys saw what was happening. And then I think it was a Friday in December, which it's kind of like now, the last week in August, where guys are kind of like checking out a little bit. So you and I got to happy hour, and for some reason we forgot to turn the cameras back on. What happened exactly after that, I'm not really sure.
I don't know. It was like there was some bourbon involved, and I really don't know what happened after that.
So this is in place of what should have. You know, we had a great with Sean, and we'll talk about Sean. We had a good time. So JC and I got into it and argued about the markets. It was great. So
and then you guys talking about options, like this is way above my pay grade. Like I didn't know what the hell you guys were talking about. Like this was like next level. I was like, I'm gonna go get beers. You guys want anything?
Oh man, no, it's good. So talk to me. You just in the time that since we've recorded that, you ventured into options. You've got Sean working on the option product. How's it going for you?
I mean, awesome. I mean, I always knew Sean was a smart guy.
Yep.
Known him forever. Known him for a decade. And I knew he was a nice guy, sweetheart of a guy, right? Just like a good-hearted dude.
Yep.
I knew all those things, so I figured you put all those together with our audience who, you know, there's a huge thirst for options, as you are well aware of. And, you know, but he has totally just exceeded all of my expectations. I mean, he's absolutely killing it. You know, obviously, the technical analysis that we've been doing has worked. We've been super bullish. The market's making all-time highs every day. Like, we've been on the right track.
Yeah.
So he builds option strategies around the technicals that I'm doing. You know, we have Tom Bruni, who's a technical analyst at our shop, who's just, you know, the smartest kid in the world. So we're lucky to have him, too. So Sean has both of us to his disposal. So obviously, he's coming up with really, you know, brilliant and simple stuff, you know, vertical spreads, calendars, riskies, you know, like nothing complicated. And when you guys were talking about at the bar, I was just like, I was getting dizzy just thinking about it.
Well, you know, it's cool, and you know, I'm kind of going down that path where like it's great that we're in a breakout bull market. It is August, so I think we've got to be nervous about that. But Russell's making highs, the S&P. We're gonna talk about this in a second. S&P made a high by 0.5 of a point and didn't hold it. But you know, when the markets are quiet, just options there's a great way to just trade non-directionally, and it's kind of counter to everything you and I have studied growing up, but if you can identify when a market's not trending but in a correction, you can sell those options, protect yourself, and just collect a little. It's a whole new kind of world that I've just kind of been exposed to in the last 5 or 7 years. So it's I don't know, man. There's just not enough time in the day, but.
Well, as the great Dr. Emmett Brown once said, you have to think fourth dimensionally.
Fourth dimensionally. Actually, I say that when we say, listen, remember what we're looking at in the weekly chart, carry that down to the daily chart. Okay, remember resistance in the daily, get down to the 4 hour. Dude, all right. So what else is going on? So we've got the options going. We've got stock market at new highs here. It's now August 21st. Follow your stuff. Obviously, you're killing it on social media. You're doing a great job. I know you're bullish, and you've been steadfast bullish. For how long? I mean, I don't even have to ask you. I know you're bullish, rightfully so. For how long, and what might derail us? Could you even venture a guess?
I think for me, the interesting part is that consensus is that we're in the latter stages of a cycle. You have these yahoos coming up with all sorts of statistics, how we're we're officially going to be the longest bull market ever, some nonsense like that, right?
That's the statistic du jour. Everyone's like, it's either today or Tuesday or Wednesday at happy hour. That's the longest bull market of all time.
Morons. I can't with them. So, the beauty of that, however, right? So it's not just about making fun of them like hee hee ha ha. That's not the point of this. The point of this, what makes it hilarious, is that the consensus, in my opinion, is skewed that we are in the latter stages of a bull market, 10-year bull market, whatever nonsense they're saying. When I've been in the camp, that is quite the opposite, that we're in the beginning. I think we're entering the third year. I think we just completed the second year of our bull market, and we have a lot of upside to run. And people are like, well, JC, da-da-da. And I could give you my reasoning, email me, jc@allstarcharts.com, and I'm happy to send it to you, all the work that I've done, really pointing to that. But when you ask me, well, JC, what's the catalyst? What's going to take it higher? I mean, technology is just now breaking out above those 2000 highs. So we consolidated for 17 years of 25% of the U.S. equities market is just now starting to break out. It took almost 2 decades to digest those gains. So I think those massive market caps breaking out to new fresh highs, the Apples, the Googles, right, all those Amazons, I think that's going to continue to be a driving force. We're seeing sector rotation all day long, whether it's financials, consumer discretionaries. I mean, come on, the equally weighted retailers index is breaking out to new all-time highs. Yeah. I mean, we're just seeing that rotation again and again and again. Biotech's now breaking out. Healthcare continues to look great, all-time highs. Transportation stocks, right? Railroads been absolutely ripping.
That's one thing. I saw you put that on Twitter. Transports were weak, and I actually took a swipe on the short side of transports about a month or two ago. It worked, but they've come tearing back, and led by the airlines, right?
The airlines were obviously the struggle, the ones struggling the most. Railroads just kept ripping. Railroads have not corrected anything, while truckers have had some sideways. I mean, truckers are making new highs as well, just nowhere near what the rails are doing. And then not to mention, the airlines are now starting to come back. And the worst airlines, they don't look terrible. Yeah. They just don't look as good as the rest.
Hang on. You just hit like 2/3 of the entire U.S. stock market in 4 sentences. Hold on. I'm looking at. See, I don't know how exact. I've never done an interview like this, so I've got a couple cameras going. I'm recording your face. I've got an NDX chart over your right shoulder. I don't know if you can feel it sitting on your right shoulder. Yeah. No, your other right. No, that's it. No, you nailed it right there. Dude, this is gonna be so funny. So NDX high was 4880 in 2000, and we're at 7397. I mean, we're 30% through that high.
You're talking about specific stocks. You're talking about the Nasdaq.
NDX, the NDX 100.
Okay, so look at XLK, which is the technology.
Yep.
We're just now breaking out above those highs.
Now,
you're right. Same thing in the semis. Look at the stocks.
And one thing to that point, since we're going down to semis, semis, the 2000 high was about 100. We're not even really through it yet on the SMH. So one thing, and I know you've been bullish, and I totally give you credit for that. How do you square with specifically SMH correlations to Asia? Our chips and technology is going to show a bigger correlation. China, Nikkei, Korean Kospi. You know, if you even look at like an ETF like the VEU, all world ex-US. I mean,
the problem with those is that they're all US dollar denominated. So if you look at all of these countries on their own right, they actually don't look that bad at all. Most of Russia's breaking out to new highs. Australia is making new highs every day. You know, Canada's making new highs. So if you look around the world, there's performance on an absolute basis in their own currencies. If you're looking at US dollar denominated ETFs, you're going to get huge currency exposure. So the fact that the dollar's done what it's done is going to affect those ETFs when you're not quite seeing that in the individual ones themselves. And then with respect to your question on the semiconductors,
wait, hold on.
Like SMH that have huge market capitalizations,
go back.
they're driving SMH.
Go back.
The XSD, which is the equally weighted, is like 1.5% from all-time highs. Like, that's not a bad thing.
Go back. Asian equities denominated in local currencies, are they through the highs?
Well, what are we talking about? We're talking about Hong Kong?
We can talk about Hang Seng. We can talk about Shanghai. We can talk about even the Nikkei. Nikkei in yen, because I know Nikkei in dollars is not through the 2000 highs.
Well, no. Nikkei is, I mean, that's another story. But Nikkei is above the 2015 highs. Like,
right.
Nikkei is still needs like another, 35-40%, something like that, just to get back to the former highs. So that's another story completely. But nonetheless, it's still making new highs above the 2015 highs, which I look to as an important mark. Hang Seng, to answer your question, is right at those 2015 highs. We're basically retesting that as we speak, which quite frankly I think is perfectly normal. And then you were asking about Shanghai. Shanghai looks like crap, but when you overlay Shanghai Composite with the S&P 500 over time, there have been a million different periods where Shanghai's getting slaughtered and U.S. stocks keep making new highs. So of all of those indexes, the least correlation, one closest to zero, is Shanghai.
Looking at FXI, you can feel that chart on your right shoulder. Well, let me get it off your face.
Well, FXI is a different story because FXI is dollar denominated, and it's the Tsinghua 25. It's not the Shanghai Composite.
It's not the Shanghai.
So the
Shanghai
25 is going to be much more correlated with EEM. You punch up FXI and EEM, they look the same.
Yeah.
But Shanghai is just another mess.
FXI is basically half of EEM. So.
Yeah, and then you have EWY, which is South Korea, which is basically all Samsung.
Yeah. All right, so continue to be bullish. What derails it? Is it domestic forces? Is it international? What might get in the way?
I think I don't worry about so much what is going to derail it. I think that's less important as to what sort of characteristics we should look for from the market if it's going to get derailed, right? The reason itself I'm not really concerned with. Yep. I want to see what we're watching. So what are we watching? Well, right now, the Russell 3000, which is 98% of the U.S. equities market, right, of all investable assets in the U.S., so I mean, that's the stock market, is just now breaking out to new all-time highs above the Q1 highs. So if we're holding those levels, man, it's really hard for me to be bearish. But if we completely fail and break back down below that, we could start to make a case for maybe a massive, bull trap, who knows. But we're just not seeing that. We're seeing the opposite. We're seeing aerospace and defense breaking out. We're seeing retailers breaking out. All the market indexes, small caps, mid caps, one after the other. So, I mean, it's just hard to be bearish in that sort of environment.
Absolutely.
I would be looking at credit spreads. Look at the bond market. The reason I was super bullish in the first quarter, buy this weakness, we have to buy this weakness, is because we weren't seeing any stress in the credit markets. Zero stress, It was like, you look at the junk versus, high grade. Look at junk versus U.S. Treasuries. Look at those spreads, and they were super, super narrow, and they still are for that matter, obviously. But if those things start blowing out, that's a heads up that something's up.
How about, this is the most traditional metric, and I'm not sure we're going to get this. We're getting a flattening of the yield curve, but I don't know. I don't even know if this market has it in. I don't know if the Fed has it in it right now to create an inverted yield curve. I don't know if there's the appetite to jack interest rates up. I don't know.
Let them invert it. Who cares? And the yield curve is flattening, and historically the stock market does very well in a yield curve environment that's flattening. So what's happening in the bond market is very consistent with the fact that stocks are making new highs.
Yield curve inversion topped out in 2000 mark and 2007 mark. That's just fact.
Right, but the tops didn't come until after inversion.
Correct.
Throughout the flattening process of that curve, stocks did very well.
Yep,
and it
absolutely.
wasn't until after the fact that the market's topped.
Hey,
so we'll worry about it when the time comes.
Just so you know, I am balls long right now. I've got Russell. Yeah.
Fade rally.
No, man, I don't know. We'll see. I've got an
Dude, I'm in, bro. I'm bullish. I'm in.
monthly. I've got a call butterfly. So basically, like, it's positive. It's centered around 1730, where we closed at 1718. Upside is 1760. The way I have it from a wave count, I think we continue to move up, and I'm trying to collect some theta. I don't think it's going to be a straight move. I think we kind of rally and just kind of hang out for another month or so. So we'll see. I mean, I'm with you, man. I'm fully long this market. It acts great. So what else? Yeah, stocks are good. What do you think about interest rates? What do you think longer term? Is this a bear trap on bonds, kind of a false break on yields, or do you think we've seen significant top in bonds?
I think it's probably going to be a process. You know, historically, go back 200 years of interest rates. These bottoms take forever.
Yeah.
So what was the low? Summer 2016. That was 2 years ago. Some of these bottoms over the years can take 10, 12, 15 years to bottom. So the truth of the matter is, I don't expect the first V bottom in interest rates.
Yeah.
Why should we expect something we've never seen? So
It would
I
be
would
the-
say just expect what we've always seen, just a major messy bottom.
It'd be the first. What's crazy, as you and I are the same age.
I wouldn't expect that.
Since
Makes sense.
we've been alive, bond yields have been dropping. You know, and you and I are starting to knock on 40, and they're starting to begin to move up. That's a good point.
Listen, we don't have, how many sample sizes do we have of rates bottoming? 4 in like 200 years. So like, it's not like we have so many sample sizes. So we're gonna go with what we got. But it doesn't necessarily have to be like, it could be a V bottom. I'm not betting that.
Right.
I think it's just going to be a messy mess.
And I'm looking at the short interest right now. The futures contracts, like, massive record short interest in bonds and in gold, and that's one trade I'm looking at. I almost put the trade on. I just did it for CNBC today, but I almost put it on with my members. Long gold, long bonds. I just feel like that trade is way too crowded at this point. So
I don't love the long bonds. The metals, listen, if this dollar keeps getting killed like it did the last couple of days.
No kidding, right? Holy.
Certainly set up like that. We get that Euro rally, you know, metals are going to do well in that environment. You know?
And I
like stocks. I like stocks.
And I know you won't take this bait because you stick to pure charts, price action, but, you know, what is Trump doing? Like, he's trying to haze or fade the Fed. Like, Jerome Powell, you better not be hiking rates. I can't believe the foreign exchange market took it seriously. I mean, dollar got hammered on that. You know, come on.
I defer to you.
Yeah, I know. Good answer.
I can't. I mean, whatever.
Whatever.
I don't know what's going on.
My whole point is,
worried about what charts I'm looking at.
I'm surprised.
And what wine I'm going to pair it with.
I'm surprised the foreign exchange market gave him that credit. That's my only point. But you couple that with gold into support. So, what are you drinking for wine? What's pouring well by you these days?
You know what? I've been, for fun, just been studying for my sommelier. I'll be certified a sommelier at some point next year. I'm in no rush. You know, I got charts to look at, right? But so I've been going out of my way to drink some more Burgundy, because Burgundy, there's a lot. Like, you know, basically the whole world of wine, half of the world of wine is just France alone, and then Burgundy is like half of that. So like, Burgundy alone is like a quarter of like all of the material in like the worldwide web of wine.
Wait, so is Burgundy? Burgundy's a region as Bordeaux is a region?
Right.
So Burgundy is bigger than Bordeaux?
Burgundy is much more complicated than Bordeaux.
Okay.
Bordeaux, you've got basically left bank and right bank.
Wait, hold on. Let me show my little small knowledge. We've got Premier Cru, Grand Cru, and there's some other one.
You're drinking Cru, and that's, the quality is going to be more expensive, obviously. Doesn't necessarily mean that one is better than the other. What I like about wine is that it's a very selfish endeavor. You drink what you like. What you might like, I might hate it. Or you and I might completely agree. And either way, it doesn't matter. It's actually better when we don't agree, so we don't drink each other's wine.
Yeah, right. You drive the prices up. Oh, man. All right. So, hey, you're getting married soon.
I'm getting married in May of next year, so we're very excited.
May of next year. Wow.
Yep.
I'll be waiting for my invite in the mail. Where are you doing? I'm sure you're doing it locally, right?
Poconos.
You're doing it in the Poconos?
Getting married in the Poconos.
I'll be expecting an invite. Because your wife is from, right? That's right. She's from that area.
Yep. And then between now and then, we'll just, try to do some traveling. I'm going to go out to China, see what all the fuss is about.
Listen, I told everybody before you have kids, listen to me, JC, before you have kids, and you're doing it anyways, travel your ass ass off, man. Do as much as you can, because one will handcuff you, but if you by chance hit the ticket and get twins, you ain't doing shit, man. Do as much as you can. Enjoy each other's.
That's right. Listen, I have contacts out there. They invited me to go speak. Shanghai, Shenzhen, go to a couple of other smaller towns, and you know, I go out there, and I've been, you know, to Tokyo, and obviously we were talking about before, and India a couple of times, Hong Kong a couple of times, right? And I'm happy to give a presentation on technical analysis. Like, we could do this shit all day, but I'm winning because I'm asking the questions, right? That's the happy hours afterwards, the dinners, the lunches, the meetings. You know, I come back from there like a wealth of knowledge. I mean, it's such amazing perspective. Just beautiful people you meet around the world. Just other technical analysis nerds, just like you and me. You know. That's awesome. Like, we know each other forever.
Good, good. I love it, man. That's awesome. I mean, we're already 20 minutes. We got about 10 minutes of vlog, 8 minutes of vlog material before, so this is going to be a doozy. Dude, great catching up, man. If there's anything else, I mean, I think we hit it all. We hit markets, we hit wine, we hit traveling. You know, we continue to be bullish. I think I'm right with you. This is a strong market. No need to overthink it. Doesn't matter how old the bull market is, right? It can go on as long as it wants.
You know, you were like, oh, what inning are we in? It's like, yo, we were in extra innings and just deal with it. This game can go on forever. Like, you know, I go to India and we're watching, like, the cricket games. Like, these things last a week.
Yeah. We could just, you know, we might be in the 11th inning, but we could be playing a doubleheader.
That's exactly right.
Yeah. All right, man. Good. Hey, that's awesome, dude. Thanks. This will make a good video. If you guys enjoyed that, be sure to hit thumbs up. Be sure to hit like. Drop a comment. JC, are you doing YouTube, brother, or what?
Yeah. I got some YouTube videos. We got some cool stuff lined up. We're working on it.
I'll link them below. So go check them out. Dude, great catching up. Best of luck, and I'm sure I'll see you at an event soon.
Thank you. I'll see you soon in New York.
Awesome. Oh, man, that was good. Let me just hit stop. And that was 20 minutes and fast.
Yeah, I wish Bob Marley would still be alive.